When gold crashes 6% overnight, it's not really about the price. It's about what it reveals: fear, greed, and the quiet power that moves every market. For months, gold was the sure thing. The world was running to it like it was the last safe island in a storm. Then in one night, billions vanished. How does something everyone calls safe collapse that fast? That's not just an economic story. That's human psychology in motion. In this video, we're not just talking about charts or commodities. We're going deeper into the mindset behind money. Why do investors chase what they fear losing? Why do people trust the crowd when the crowd is usually wrong? If you've ever wondered why markets rise and crash and why emotions, not logic, often win, you're in the right place. Welcome to Mindset for Wealth, where we break down global finance through the lens of human behavior and wealth psychology. If you find value in this kind of content, make sure to subscribe and join our community of smart investors who think differently. The fear that drove the gold rush. Every market story begins with one emotion: fear. When people fear inflation, fear a war, or fear that governments are losing control of their money, they run to what feels safe. And for centuries, that safe place has been gold. In 2025, that fear came roaring back. The world was uncertain again. Inflation data came in hotter than expected. Central banks were quietly buying gold at record levels, and headlines screamed that the US dollar was losing its dominance. To the average investor, the message was clear: get out of paper money, get into gold. That's how it always starts. Fear doesn't just move prices, it drives stories. It creates a narrative that feels logical when emotions are high. You see news anchors showing gold bars, social media influencers posting charts of record highs, and suddenly everyone starts to believe the same thing: gold will protect me. But here's the truth: fear is not protection, it's reaction. And when millions of people react the same way, they don't find safety. They create a bubble of comfort that's about to burst. Every major rally in history, from real estate to crypto to gold, begins with the same question: what if I lose everything? That question triggers panic buying, not strategic investing. And panic buying always ends the same way: in pain. The gold rush wasn't really about value or fundamentals. It was about emotion. It was about people trying to control uncertainty by doing what everyone else was doing. But when fear becomes your investment strategy, you've already lost control. When greed takes over, after fear comes greed. It's the most predictable transition in finance. The moment people stop running from danger and start chasing the illusion of safety that's now making them rich. As gold broke through record highs, the tone of the conversation shifted. The same analysts who warned of volatility a month earlier were now calling for $5,000 gold. YouTubers and TikTok traders were posting screenshots of gold charts like badges of honor. The narrative changed from protect your wealth to get rich before it's too late. This is where emotion disguises itself as intelligence. Investors start believing that they've found a shortcut, that the market has confirmed their wisdom. But it isn't wisdom, it's validation. They don't study fundamentals, they study trends. They don't analyze, they imitate. When prices keep climbing, logic quietly exits the room. People stop asking, how much higher can it go? And start saying, it can't possibly go down. That's when greed takes over completely. History repeats because psychology doesn't change. From the tulip mania of the 1600s to the dot-com bubble to crypto in 2021, the script is identical. Fear drives you in, greed keeps you there, and denial finishes the job. The gold market became a theater of confirmation bias. Every dip was a buying opportunity. Every warning was FUD. Every cautionary voice was negative. Until the chart that everyone worshipped suddenly turned against them. And here's the irony. When greed peaks, confidence is at its highest, but stability is at its lowest. That's the exact moment when the market no longer needs new buyers. It just needs one reason to fall. And then, it happened. In less than 24 hours, gold, the symbol of stability, dropped nearly 6%. $1 trillion in global value evaporated, and the so-called safe haven suddenly didn't feel safe at all. The same people who said, buy the dip, now whispered, get out before it's too late. The same traders who called gold unstoppable were now asking, what just happened? This is the moment when reality takes back control. When the narrative breaks, emotion flips. Greed transforms into fear, and not the strategic kind, but the primal kind. The kind that makes you hit sell without thinking twice. Behind the scenes, a perfect storm was building. The US dollar strengthened on new inflation data. Treasury yields ticked up. India's post-holiday jewelry demand dried out. And central banks, the same ones that fueled the rally, quietly paused their buying programs. One domino fell after another, and psychology did the rest. This wasn't manipulation. This was math meeting emotion. When a market rises too fast, it prices in perfection, and perfection doesn't last. The chart became a mirror reflecting human weakness. Fear of missing out turned into fear of being trapped. If you zoom out, every market crash looks the same, but when you're in it, it feels personal. Investors don't lose money, they lose confidence. They don't just see numbers fall, they see their beliefs collapse. And that's when the true power of the market shows itself. Because markets are not controlled by gold or dollars or even governments. They're controlled by psychology, by millions of decisions made under stress, by the same emotions that built civilizations and destroyed them. The crash wasn't just a loss of value, it was a revelation. It reminded everyone that no asset is safe when human emotion is the driving force. The real story behind gold's fall isn't about charts, yields, or currencies. It's about how emotion, untrained, unchecked, and unexamined, destroys more wealth than any market correction ever could. The best investors in history don't win because they predict the future. They win because they control themselves when everyone else loses control. They understand that fear and greed are not signals, they're noise. And the quieter you stay when everyone else is screaming, the more power you gain. Think about it. When gold was rising, people were buying because others were buying. When it fell, they sold because others were selling. That's not investing, that's reacting. And reaction is the enemy of strategy. Mastering emotion doesn't mean ignoring risk. It means understanding it. It means recognizing that markets are designed to test you, to make you question your conviction, your patience, and your discipline. That test is the price of entry for every successful investor. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." But the key word there isn't fearful or greedy, it's when. Timing requires calm. Calm requires clarity. And clarity only comes when you detach your ego from your money. So if you learned anything from this gold crash, let it be this. The next time everyone rushes in one direction, stop, breathe, and ask yourself, why? Because true wealth doesn't come from following crowds, it comes from mastering yourself when the crowd loses its mind. Markets will always rise and fall. That's the nature of the game. But your mindset decides whether you survive or start over every time it happens. Gold's crash wasn't a tragedy. It was a reminder. A reminder that wealth doesn't belong to the smartest investor. It belongs to the calmest one. The one who thinks when everyone else reacts. If this message hit home, don't just watch and move on. Act differently. Keep learning, keep questioning, and keep building the mindset that outlasts every market cycle. This is Mindset for Wealth, where we turn financial chaos into clarity. Make sure you subscribe and join a community of thinkers who see beyond the noise. Because in the end, mindset isn't just how you think about money, it's how you win it.